Hi, I'm Dan.
And I'm James.
And welcome to the Cornwall Property Podcast, where every week we bring you the latest news, hot topics and guidance around the Cornwall property market.
Stay tuned to be informed, inspired and to have any of your property related questions answered by trusted local property professionals.
Hello, welcome back. I'm Dan.
I'm James.
And we are also welcomed by a special guest, which I'll introduce in a minute. But this is the Cornwall Property Podcast. This is episode 60, believe it or not, wow. James. Thank you for those who are regular listeners, and thank you for all of those who've been in touch this last few weeks, actually, as well. We've had plenty of comments and messages from you all, which has been lovely to see and hear.
Absolutely, and thank you for all your questions and everything that you put to us. Without you guys, we wouldn't be able to make it happen. And just remember, you can do that by going on our social media platforms such as Facebook and Instagram. And you can also drop us an email on podcast@cl-property.com, as Dan and I are here waiting to hear your comments.
That's it. So today we've got a very special episode for you. And the reason why it's so special is because we've got a very special guest for you as well. So we are joined today by an absolute guru in the commercial sphere. By Mr. Tom Smith. So Tom, who are you? Talk to us. Who's Tom? If they don't know Tom, where have you been?
Picked him up on the A30.
He found his way here, Cornwall Channel. But yeah, Tom, who are you? Give us a little bit of a background, please, for those who may not know who you are.
Thank you for that very glowing intro. A very special guest indeed. So my name's Tom. I'm one of the partners at Miller Commercial. We're a Truro-based firm of primarily chartered surveyors, but we do all aspects of commercial property is our bag. So we advise on all parts of the life cycle of commercial property. That's everything from the inception, development, investment, through to the management, the leasing, the professional advisory services that come with that throughout the course of the life of the building. We can buy buildings, sell buildings, let buildings, invest buildings for our clients, for our customers. And we spread from as far west as Land's End up to probably somewhere mid Somerset. But yeah, Cornwall and Devon are our happy hunting ground.
Fantastic. And we came across Tom when we purchased a commercial property. Obviously, those who follow James and I, we kind of stumbled and kept in that kind of sphere now in terms of commercial property. We generally buy commercial property and turn them into residential conversions wise. And Tom and Miller have been absolutely fantastic in helping us and assisting us in the purchase, and also just guiding us on other areas of the developments as well. So can highly recommend the services. And if you've got any questions commercial wise, please don't hesitate to give the guys at Miller a call, because they're so helpful across the board. So the idea for us to have Tom here today is to give his kind of commercial view on it. Now, as you guys know, the whole idea and the vision of this Cornwall Property Podcast is that we know there's a housing crisis. We know that we need more housing in Cornwall. We want to kind of educate, inspire you guys who are listening and watching the podcast to, one, take hold of it, make some money yourself, perhaps get involved with property. The beauty of having an expert such as Tom here with a commercial view on it is there's not just residential opportunities here. If you actually look outside the box and look at commercial property, there's so much commercial opportunity whereby it's a slimmer market because people are maybe a little bit scared, a little bit more fearful of what can be done and what can't be done, which is why it's so important to link up, find professionals that you can have as what we would call our power team. So it's finding those, who can I go to and ask these questions for? How can I get that advice and that guidance to make these sort of decisions? And Tom and Miller, these are the guys that we would go to personally to if we had a question about a property or a particular location or maybe values and things like that. The first people we'd be calling would be Tom to get those sort of figures and ideas on, because we know and trust and like these guys, and they're just so willing to put themselves out there and give us that helping hand and that guidance, really. So we want to give you guys a steer and a bit more confidence in taking a grip and have a look at commercial property. It's not just residential property. So Tom, with regards to that, do you think there's more opportunity than ever, or maybe it's not so much at the minute with regards to commercial conversion side of things? How would you see that sort of area?
Look, I think there's always opportunity. That's what I think makes this sector of the market so interesting, that there's always opportunities. Doesn't matter where we are in terms of economic cycles. Whether it's a growth cycle or recessionary cycle, it doesn't matter. This is the great thing about commercial property. It offers opportunities at every stage. Right now, what's going on? There are certainly we're anticipating seeing more opportunities there for developers in the coming months ahead. I mean, we don't have a crystal ball. Don't we wish we had the crystal ball, because wouldn't we all be millionaires? We can see it when there will be possibly some more distressed sales coming through in due course, people changing their minds about what they want to do with their property because costs are going up, etc. And that gives the chance of somebody to come in and breathe new life into a building. And I think that's often the case. And that's often what we see down here is where assets, buildings are held in family estates or trusts for a long period of time. They kind of run out of energy. And it's really, and that's the
and vision as well.
Yeah, totally, exactly. And the property market has changed out of sight and mind in the last 15, 20, 25 years. Previous, thoughts and impressions and understandings of what commercial property was 25 years ago, I think are very different to where we are nowadays. I think it does give anybody who has got that entrepreneurial mindset an opportunity to come in and re-look at property in a different way now, and put their own mark on it.
Definitely. I think one thing we love about commercial property is that someone could go into the same space and see it in a completely different way, because there's just so many ways to skin a cat as such. There's so many ways that you could readjust it, re-alter it, change it. Like if you walk into a house, there's not a lot you could really maybe change or alter. Whereas you walk into a commercial property, depending on what the type of property it is, it's commercial is such a vast array of possibilities, use classes. So there could be so many different possibilities and opportunities in there. So I think it also reiterates the importance of having someone in your power team, such as Tom, such as Miller Commercial, that you could go to and ask these questions and get that kind of idea and steer on for sure. So guys, those of you who are regular listeners, we do podcast release every week. One episode is a market update, and the following week is a Q&A session where we ask Dan and James. So this episode is our market update episode where James and I have picked a couple of articles that have caught our eye in the week and wanted to just keep you guys educated, informed on the property market in general. And obviously today we've got the beauty of having Tom here where he can also give his 2 pence worth as well. So the first article, again, it's not necessarily an educational one, more of a tongue-in-cheek one for me, but I know people are always interested in what the highest priced properties are and what they're going for, and always quite nosy in terms of what other people are selling for. But this is actually a Cornwall Live article, and it's a new record for Cornwall. It's a new record for the most expensive house ever sold in Cornwall. So previously, this title was owned, or was the crown of this title was given to Gordon Ramsay for selling his previous, which was at 7.5 million. But the most expensive property now in Cornwall was sold at 8.1 million pounds, and that was sold in October last year. And it's quite a big jump from the 7.5, to be fair. So this is North Cornwall, but as I say, Gordon Ramsay, his property was, the celebrity chef purchased a property in Rock for 4.4 million in 2015. After demolishing it and rebuilding it from scratch, this negated the need for his former Trebetherick home, which became the most expensive sale in record. Now, Moonshadow, James knows this property, as I'm aware from James's background. Moonshadow, which is not so far from the Rock property, this is sold for a record amount, and the actual figure was 8.125 million.
Wow.
8.125 million pounds. Now, this is massive figures, absolutely crazy figures. Now, this property is, as I say, located in Trebetherick. This is a village on the north coast, if you're not so familiar with it. I wasn't actually so familiar with Trebetherick until I looked into it. Again, home not just to the rich and famous, but there are famous beaches over that way with Damer Beach. Now, this is actually a detached property which was built in 2015 to 2016, and I haven't got them if you're watching the video, but if you're on the show notes, go on the show notes to this episode and you can go on the link to the actual article, and on the article you can see a YouTube video which gives you a little tour of that property. So yeah, staggering, 8.125 million.
Yeah, it doesn't surprise me.
Fancy one of them?
I don't know if I would spend that much actually on a house, but I know, this is not really like at market value. This is what somebody is willing to pay. And when you go onto sort of the millionaires playground in North Cornwall, you tend to get into sort of like a bidding war. Now, just by seeing the price at 8,125,000, it's very, very specific. I would imagine it did go to a bidding war, and it's just as much as what somebody wants to pay for it. And you've probably got 2 or 3 people fighting to get it. And people want the status of actually having the most expensive house sold in Cornwall because we live there, and maybe look at me. I don't know, but it's its own bubble in that area. Like other places in the country, like Sandbanks, people will just pay what they want to pay for it in the bidding war, really. So fair play, and a good contribution of stamp duty, I'm sure.
It's interesting you say that. Sort of, is that actually market value? I think by definition, it probably is market value. That people get put into a best bid scenario, they set the market.
Yeah, exactly.
That is where the market is. It is what somebody is willing to prepared to pay for a property at any time in
set a new bar.
Yeah, exactly. That's it. So is this the new market value for premises up in those isolated villages up on the north coast, which are so finite in supply?
Yeah.
So you're always going to find those people bidding hard for them, I think.
Yeah, and it'll be a certain type of person, obviously. I mean, if you look at general mortgages, they're timesing your salary by 5, so you could be about 1.6 million on your annual earnings to afford something like that. But
So they probably bought that with cash anyway, wouldn't they?
I would imagine so.
Yeah,
Yeah, absolutely.
sure.
But wow, yeah.
But with that in mind, a tedious link or such, but the second article I've got is looking at the Halifax data. So Halifax have released an article recently where they've actually said that they've looked at the January figures in the housing market, and they've said that the actual figures are flatlining. So we haven't seen a drop in January, haven't seen a rise in January. They've literally stayed consistent. So this is quite a surprise to many, especially property experts, because they were expecting a drop, quite a little dip within the Q1 section of the year. So again, it's difficult to take this too seriously because you've also got Nationwide, who also did an article last month, and Nationwide is saying there was a drop in house prices. So again, things to bear in mind, these banks that are doing these articles, they're not taking into cash purchases either. There's just the obviously mortgage side of things. And does it really matter to you guys? It shouldn't really. It's more of just an indicator. It's always interesting to see where we're at, but what do people really care about? What is your property worth? Now, this is an average figure. These are average numbers. We're not in the average location. We feel Cornwall is in a little bit of a bubble of its own, but it's always interesting to keep an eye on these kind of stats, really. So again, Halifax flatlined in January. Nationwide have said that there was a little bit more of a dip, and they saw a little bit more of a dip in the market, but ultimately it's not as big of a dip or downward curve, should we say, as people were anticipating at the start of the year, which is, I think, encouraging. And I still think at the end of this year we will be seeing a positive in the property market, personally. Would you agree?
I would agree. I mean, I know things may have, because they were soaring over the last couple of years just because of the pandemic, but of course the government with inflation have tried to level that out with making the cost of borrowing more expensive, so people are kind of holding off. And being in the property game ourselves, Dan, you know, you'll say everybody's kind of, we're just going to wait and see what happens. You know, for us, not quite the case. You know, we're trying to take the opportunity of that while people wait. We'll still plough on forward, but I think lending will get cheaper at some point. It has to show some form of mercy, and that was the government's plan. They want people to not borrow so much and just, you know, let things cool off a bit. So I think the plan is working, but yeah, I can't see you're going to see too much of a dip. But I think Cornwall holds its market very well. Why? Because people still want to live down here, and why wouldn't they? So yeah, be interesting to see, but I don't think there's going to be a massive dip here. I really don't. I think it's going to, you know, continue where it is.
Yeah, I don't think it's going to necessarily get. We've been seeing such increases over the last few years, which makes any kind of stale section of the market now think, oh crikey, it's going to fall on its arse. But really, no. I think just because we've seen such high peaks over the last few years, if you actually look at the data, we're actually back into a normal market now. If you start looking at the data from back in 2019, 2018, the stats and the figures and the level of growth that we're seeing, it's actually a normal market. So it's just trying to give you guys a bit more confidence, and don't always read what you believe what you're reading in the press, because it's all doom and gloom. It's not. Start looking at the data, start looking at the facts. It's not all doom and gloom, and get yourself a bit of confidence. This might be an opportunity whereby, because people are so wary, it might be a chance for you to get yourself a good deal and get yourself a great opportunity. But again, always seek advice. We're not mortgage advisors. We're not financial advisors. This is just our guidance, our view. So always do go to your own advisors. But from our point of view, I don't think it's too much to be concerned about. And always take your investments with as minimal risk as you can, because you've got to do your due diligence. You've got to do your homework. We're all well and good, and James says that we're still plowing ahead, but we'd never do anything silly. We are still taking educated investments, and we're doing as always. We discussed last week on the podcast, so we always do our numbers contingent anyway. So what if the worst case happens? We can live with that, and as long as you guys, I think, go with that mentality, and any opportunity, any deal you've got, like, what is the worst case can happen here? Okay, can I live with that? I can. Well, let's crack on then, because what might happen? It might not be the worst case. It might be the best case, and you'll be absolutely laughing. So, but don't close your eyes. Don't close your mind off to investing in property just because the press say other certain things. Do your homework. Do your research. Do you agree with that, Tom?
Yeah, it's sound advice, isn't it? Don't overexpose yourself. But if you're in a market and you understand, you know, what your long-term projections are, what your income is, and you make sound, rational decisions off the back of that, then you know you should be fine. You know, again, we do know, and I always think back to this example that, you know, property is so finite. It is very difficult to suddenly increase or decrease the amount of property that's on the market at any one time. And you know, that's the case all around the country. It's not just down here. So you know, your long-term prospects on property, yes, they might go up, they might go down, they might flatline for a little while, but actually, you know, if you're making prudent investment decisions and looking at the long term, then there's no reason
really
to
lose.
No, exactly.
Yeah,
And
I think it was very uncertain last year, where you had 7 Bank of England increases on the base rate with interest rates. We've already had one in January this year in 2023, but I don't, because they're starting to see the results now, they're getting that data in. I don't think you're going to see a further 6 increases because it's just going to make it absolutely impossible. So I think people kind of know where mortgages are going to be going. They're not going to be going any more than that. Maybe 1 or 2 raises, but I don't think it's going to be like last year. It just can't be
as steep as
definitely
each
not.
time. Maybe I'll just put my neck on the line. I reckon 0.25% next raise. I reckon that'll probably be about it. But
we shall see.
yeah. You heard
You heard it first, yeah.
That's it. James, what have you got for us?
Well, I've got a headline that I found for private landlords, which is quite related to those base rate increases on the interest. So I've got this headline: private landlords with buy-to-let mortgages face significantly higher costs in 2023, which we kind of all knew it was going to go in that direction. But I've got some more stats here that kind of, backs up, where that has actually gone. So almost a third of private landlords with a buy-to-let mortgage face the prospect of significantly higher costs this year, the National Residents Landlord Association reveals. The research found that 63% of landlords have a buy-to-let mortgage on at least one property. Of this group, 29% plan to remortgage at least one property over the course of the next year. Now, that remortgaging, the article goes on to explain, is that landlords are a little bit worried. They want some extra cash in the bank just to make sure that they can,
Sells afloat.
Exactly that. And the Bank of England has forecast that by the end of the year, monthly repayments for buy-to-let landlords, get ready for this, are expected to rise on an average by £175. It has warned that a fifth of landlords with such a mortgage will face increases of over £300. Now, we all know through past episodes of the podcast that with Section 24 that, if you've got an interest-only mortgage, which most buy-to-let landlords have, that you can only offset 20% of that. So not only have they got the hit of that over the last 4 years, but that's gone in increments of 25% each year, they've now got this where their mortgages are going up. Is it viable for landlords to, have buy-to-lets? Are they actually making any money? And we were all having a conversation before the podcast earlier on in the week, and it's just kind of like people are just going on capital appreciation alone, and our landlords thinking, do you know what, I don't think properties are going to go up that much, I don't think they're going to go down that much, but I'm not going to make much on the buy-to-let side. Do I get rid of it now? Which might open up opportunities. But Tom, you got any thoughts on what you think with that in terms of rates? Is it worth it for landlords?
It's difficult, I suppose, isn't it? And it probably does depend on the individual circumstances for each individual person sort of looking at it. But yeah, clearly that extra fat, the real incentive to take the risk and invest in property, which does come with its risks. If that additional fat, that the income is getting squeezed, of course it's making it less and less attractive for landlords to hold on to things. And yes, the tax breaks that were there are being removed. So of course you can see for some people they are going to make the decision that fine, right, let's walk away and let's look at another asset class, let's look at some other source of income. I also think you need to get away from the idea that landlords are the fat cats here as well. For a lot of people, this might be their sole source of pension. This
absolutely.
might be this might be an asset that they've either inherited or they prudently sort of invested and looked after over a long period of time, and it really is an important source of income to them. This is not people sitting back and getting super profits out of it and having an incredibly lavish lifestyle. The majority of landlords, private landlords around the country, are normal people on the street who, it is just a major source of their pension protection or future income. Yeah. So this is going to pose a big threat to a lot of people. Where, if that source of income, that future source of income they're looking for is going to be the tap's going to be turned off for them.
Absolutely. I think there is a segment of the market as well that some people are in the fortunate position, maybe the older generation, that have actually paid those properties off, and they don't have a mortgage on it. And, as we've discussed in previous podcast episodes, that the rental yield is very good at the moment and the demand for rentals. So if you don't have a mortgage and rents have gone up, then obviously you're doing okay. But many of us do have mortgages. So I think it's just they're a little bit more cautious on what they're buying, and, they're having to buy really, really well to make the figures stack up. So.
And it's also got to just keep doing your stress tests, isn't it? Because the reason that before you can get a mortgage, they do a stress test. They check you out. Can you afford these hikes?
Yeah.
And again, I think you've just got to give yourself a little stress test all the time, isn't it? What if the boiler broke? What if this happens? Again, worst case scenarios, can you live with that? If you can't and it's too tight, I think that kind of makes a decision for you.
Yeah.
If you've got an investment, or as like you say, if it's just a pension pot, you're just banking on the capital appreciation. If you're going for an interest only mortgage, then you've got to make sure that cash flow isn't crippling you every month, because if it is, then it's really a silly move. However, if you're not crippling yourself every month, maybe you're in a slight deficit and you don't even need that money, then as Tom said, it all depends on your situation, really. And I think it's hard to really guide or advise on it. But simply, I think, what would I do? Sit down, month to month. What am I getting in and out? Can I live with that? What if something happens?
Yeah.
Am I up the creek? If I am, I need to make that decision. I think pull out, get into something else.
Yeah.
Because what benefit you're going to have. Alternatively, you could think, well, what options have I got? If I do take my money out, where can I put it? If I'm only making a couple of % in this case, well, how could I make more money? We've got investors that work with us. They actually have done that. They've sold their properties, and because they're like, well, we're not making any money. Well, we offer them 8 to 10% a year. It's like, well, that's a no-brainer. Stress-free. We'll invest with you guys. So again, it's just making sure you make the right decisions and pick and choose. And it's not for everyone. Someone might be happy there to sit there. Just keep it ticking over, no problem at all. But what it means is, obviously, this housing crisis again is Tom mentioned before we came on air. Had a good point as well. Maybe if the house is going to be selling, then maybe that brings more stock on there. But I suppose you could also catch 22 that. Well, there's tenants in there at the minute. If they're going to be sold, then those tenants are then going to be made homeless, or they've got to find somewhere new. And it's that whole. It's we just need more property. Simple as that. I think that's simply it, isn't it? Done. Oh, crikey. Put me in government. James, what else we got?
We've got even more pressures on the housing market, just with the cost of conveyancing. So it's not just your tin of beans that have gone up and your local pint. It's also lots of things in property, as we've discussed previously, but we haven't really mentioned much about the conveyancing side of things, and their rates have gone up as well. So I've got my second headline here, which is conveyancing fees lift 8% to £1,184 for the average home buyer in 2023. So, this was a report from Property Solvers, and this breaks down to rises of 2.6% for home sales and 8% for purchases compared to 12 months ago. So the quick house sale business, which surveyed 100 residential conveyancing firms, it adds that average conveyancing costs for leasehold property sales saw more notable increases, rising by 22.6% for sales to £1,351.71, and leasehold property purchases jumped by 38.2% to £1,436.92 this year. So it's one of those things. I think is it another deterrent that landlords or people buying property, even in the commercial sector, they're sort of thinking, costs aren't what they once were, and if stamp duty wasn't enough, is it really worth them buying? And we've seen, Dan, haven't we, on some of the commercial deals that we've bought, the conveyancing fees that we've gone for have towered 10,000 in some cases on bigger stuff.
I think it's another entry level cost, isn't it? It's a cost of entry into these investments. And again, it's just one of those you've got to factor in, and that ultimately makes the deal stack or not. 8%, it's only 8%, but 8%, depending on how many times you're doing this, it all adds up. But again, what you got to do, add it into your spreadsheet. Add that figure into your spreadsheet. I think the importance is actually knowing these figures, knowing what to expect, instead of you budgeting 900 quid for conveyancing. Right, well, no, just budget an extra 200-300 quid just to cover your backside. But ultimately, it's another cost. It's just going to have to go in that spreadsheet, isn't it?
Yeah, absolutely. I think if you're, doing this as a one-off thing, just buying a house that you're going to let out and that's going to be it, you're not going to do any more, and there's nothing wrong with that, then you probably are going to have those, those jumps in prices. However, if you are working with a good conveyancer, a good solicitor, you've got a good rapport with them, and you got the economy of scale, you're repeating the process, which is kind of what Dan and I do, and many other buy-to-let investors, you can obviously get a better deal. Say, look, if we come to an agreement that you are going to be the sole conveyancer, make sure they're the right ones, you've been through the process a few times and they're good rapport, good reputation, then I don't think there's any reason, and as we do, we get a better deal the more and more transactions that we go through. So again, like your broker, do your homework, but speak to other investors in the area, or feel free to send a message to Dan and I, because we're here to help, and we can recommend and steer you in the right direction for conveyancing. And for those of you who haven't invested in commercial properties before, like it is a very, very different process, and you want to get the right conveyancer, for that.
Sure.
For that
And
transaction.
you got connections with any particular solicitors you guys would recommend clients to go to, or you use yourself? Would you anyone you would recommend down here at all, or you guys have used pretty much everyone?
We work with, I think we work with just about every firm of solicitors down here, and I think they all have strong points in specific sectors, and whether you're looking at development or whether you're looking at pure investment, or if it is just a more simple leasing scenario there to get a commercial lease on something. But and they all, I think the solicitors all know what their niche is, what their speciality is, and I think if you were to shop around and speak to enough a range of different advisors, you will soon find out who is best in that sector. So no, it's very difficult to say that we'd recommend one above the other, because actually I think the majority of firms down here do offer a range of services to suit everybody, but at the same time you look at who's got the most capacity, and who comes back to the original email. It's that sort of thing. Actually,
it's not all down on price, and that's what we've definitely learned. Is it's not
100%.
don't just because they're the cheapest doesn't mean they're the best.
No, totally. And I mean, you soon get if you do speak to them, I think that's where you speak to any professional advisor, you'll soon get an idea of their speed of responsiveness, their kind of customer services, etc.
Yeah,
which stands for a lot.
Big time. And again, if you've got a question, you want it answered.
Totally.
You want to know you're going to be responded to. I couldn't agree more. And we've definitely seen that on a number of purchases that we've had. Some have been pretty brilliant, some great, and some have been banging your head against the wall. But
no, absolutely. And I think if you
that's on both sides as well. It's not just not just
no,
that
for
side.
sure. As you'll know, Tom, anyway, if you are going to buy something, you are going to get a really good deal, and the vendor is dropping a price to work with you, and part of the merit there is that we're going to move quickly, no messing around. You've got to deliver that, not, sorry, our solicitor's just gone away on annual leave for two. You need to, put your money where your mouth is and deliver that speed. So get a good conveyancer.
For sure. Right, so this is going to be the part of the episode where we bring you our picks of the week. So Dan, have picked a property that actually Tom and I spoke to us about this week, actually. And it's an opportunity that's literally just come to the market in the last week or so. And it is in the centre of Truro, and it's... so a juicy one, really. Tom, can I get you to talk us through what your thoughts are, really? So this is Lakeland.
This is the old Lakeland premises on Boscawen Street in the middle of Truro. To me, this kind of epitomises sort of where the change in the retail freehold market is at the minute. It's being sold a vacant possession. So Lakeland have upped sticks and decided to leave. I wonder why, because in my mind, Lakeland, the demographic of Truro and the local population is exactly right for Lakeland. But obviously, they've got their reasons. I don't know what's going on with the wider business there, but hey, they're entrenching they're moving out. So there we go. But it's the kind of property, in my mind, that offers huge amount of opportunity for anybody looking to buy it, because it does. It's got upper floors now. Retailers don't need the upper floors, and this is something that I wish everybody could grasp on a nationwide basis now, that the way that retailers work now, they don't need reams and reams of stories. They don't need loads of big storerooms to hold on to stock for months and months and months. All retailers now use just-in-time deliveries. Their warehousing looks after their stock, and especially the national occupiers there, the national traders. They've got very, very sophisticated logistics, which sorts out their supply of stock. So they don't need the upper rooms anymore. And they just said, they would be sitting empty. And especially where a property has got a separate access point to get up to those upper floors, it screams at me that this is an opportunity for somebody to retain the valuable part in terms of retail. And I won't go into the boring sort of aspects of how you value a retail premises. However, the ground floor and the front of the ground floor unit is always going to be your most expensive part of a retail unit. So, they're quoting here £55,000 for a leasehold opportunity, I think it is. If you were just to look at the ground floor in isolation, I don't think the rent would be vastly different, to be honest with you, because all the value is contained in that ground floor.
Shop front.
This is the shop front, exactly. It's where people come in. It's where you make that gut decision straight away. I'm either going to buy something, or no, the shop's not for me, and you walk out again. So that's the retailer's one opportunity to grab you and try and hook you into buy something. So the opportunity I see here for somebody is to buy this, to retain the ground floor. And actually, what I find really exciting about this unit is that it's double fronted. You've got a return. Well, it's not a return frontage, but you've got a frontage to the rear as well.
Access at the back, yeah.
And this is where I see Truro as offering quite not just Truro necessarily, but this is where I see the most exciting part of the market is. It's the small retail units. The big retail units, and if you walk through Truro at the moment, the retail environment is actually not that bad. You speak to different people, and some people give it a bit of a bad rap at the moment, but actually it's not that bad. Yes, some of the bigger units are empty, and that relies on bigger retailers who have got that expertise, that kind of level of funding and ability to invest to come and take these units. And if you walk up Pydar Street, there are a few bigger units now that are empty, and they've been empty for a while. But it's trying to find the smaller units, because then you're instantly appealing to a local market. Now, coffee shops, bakeries, and hairdressers are the three, and tattoo studios. Tattoo studios, yeah, exactly. Yeah. They are the
clean. Yeah.
But those are the four sort of highest demand parts of the market at the minute, and especially you can find a small retail unit where business rates are at a level where it does not affect.
It's crippling, is it?
It is crippling. It is, but that's only just because the way that we've changed our retail lifestyle over the last 5-10 years, and really enhanced by sort of the online shopping explosion that happened over the last 4 years, and COVID enhanced all that as well. So at one point the business rates were entirely proportional to a shop's ability to trade. Now they do look disproportional. But I see here, for example, this one, you have an opportunity to have your main shop fronting onto Boscawen Street.
Yep.
You've also got a small secondary unit at the back, which could be a great
Coffee
little
shop.
hairdresser's, a great coffee shop, a tattoo studio. It could be a little professional office for somebody. And actually, a small retail unit does command quite a good level of rent for what it actually is. So in fact, you could be enhancing your rental prospects here by having two different occupiers down on the ground floor, and then bringing in somebody to look at the upper floors and how you can convert those into residential
Be
units.
less risky, isn't it, this sort of size for a new business startup to give it a
That's
shot.
exactly it.
Yeah.
Exactly.
Got you.
Yeah.
And then upstairs, have you been to this property? Have you been upstairs on this one?
Oh, I do most of my Christmas shopping.
So with regards to floor plate, is this door at the front here, is that the main entrance into upstairs, or is that the main entrance?
So there's a fire escape that goes upstairs.
So that would be the access to make these into residential then,
So
I
yeah,
guess.
when I look at it, that's it. Sort of just looking on the face of it. That would be. I would see that as being your access to go upstairs.
Brilliant. Yeah.
Then of course you need to create some sort of lobby onto the first floor, and then indeed up onto the second floor as well.
Got you. No, it looks like a great opportunity. Again, there's just so many ways to look at this. Someone might look at this and think, oh, big open shop, make it up. There's just so many options here. But again, as Thomas put out there, looking at this for us, is it listed as well? I don't think, is it listed? It must be listed in the centre of
Great
Truro.
question. I mean,
It doesn't say anything on the advert, I don't think. It doesn't mention a listing on it. I didn't notice it when I read it.
No.
But be interested to look into that as well, because that will give you a few more hurdles just to jump through. Not the end of the world, but just to be aware of it. Or slightly more costly as well in certain areas. But opportunities. There's an opportunity there. We could bring a couple of residential properties to the market while still taking advantage. You could title split. And again, if you just wanted to title split, sell the commercial at the bottom end and keep hold of the residential, there's just different options here to de-risk it for yourself, to increase the value and things like, obviously this is all subject to planning, building regs, etc. Potentially listed building consent. So just again, so important to build that power team. Look, you can hear the wealth of knowledge and experience that Tom's got here. So again, further questions, get in touch with Tom as well. He'd love to help, no doubt. But great opportunity there. And again, I wonder if that's negotiable, how negotiable that would be. If it's going to be vacant, they're going to be sat on it for a little while, maybe risky wise.
I don't know who the vendor is, whether it's a propco or a family trust somewhere. I don't know. It would be interesting to understand a little bit more. But look, I mean, we're in a market. Just because there's an asking price there, that's an asking price.
Of course.
And it does demand, absolutely, test the water.
For sure. Brilliant. James, what have you got for us?
Absolutely. Well, it's not quite as exciting with all the opportunities there. It's a bit more run of the mill, but then again, you might want an investor that is a
Slightly
bit
less
more
risky.
Yeah, slightly less risky indeed, which this one is for sure. This is a property on with Bradleys. It's on New Street in Troon, which for the viewers and listeners who don't know, that's just on the outskirts of Camborne. It's on the market at £195,000 and it's a terrace cottage. And actually on the exterior, it's pretty good. By the looks of it, it's had new windows. Roof wasn't done that long ago, but internally you can just see it's extremely dated. So this is a full renovation opportunity. From speaking with the agent, it's been empty for over a year now, which is what this podcast is essentially 90% all about, where we're bringing, unencumbered properties that are empty to try and help the housing crisis. And I think this would make a good family home. So it's got 2 bathrooms, 2 bedrooms. It's also got an occasional bedroom 3/storeroom, but you could easily create a 3rd bedroom there with an ensuite for sure. It's got lounge, dining room, fitted kitchen. Obviously all this needs to come out, but it has got the luxury of gas central heating. Like I say, the double glazing that's in there doesn't look that bad. So I think this is more like a sort of cosmetic inside refurb really, but I think there's definitely money to be had here, and it is crying out for a new lease of life really for a new family.
Yeah, it could be a great family home. I'm just trying to look at this now. Is there any creative ways you could...
I knew you'd be on the floor plans.
Yeah, I like a floor plan. I do like a floor plan.
I'm definitely seeing a 3rd bedroom with an ensuite up there. I think that's the best solution, but unless you're...
Could you mini-mow it?
Do en-suites offer value? Do they add value?
I think we'd be looking at it like a HMO.
Yeah,
right,
if I looked at HMO, yeah, the en-suites are definitely more popular as a HMO in a shared house because they're not sharing the bathroom.
Yeah, I get that.
But it's also then weighing up, well, what's the extra rent for a HMO for an ensuite compared to versus the cost of putting it in. So I think you'd be looking at £3,000 perhaps. I'd put like a ballpark, pluck up the air figure for if I was going to fit an ensuite into this room, it would cost me £3,000. What's my return on that actually going to be? But I'm thinking, well, we've got kitchen, that dining room, open all that up to a nice kitchen diner, maybe even eating into a bit of this lobby area. You could potentially make this then a bedroom if it was going to be a HMO. I'm just trying to think of how to improve cash flow and make a few more rooms. So that could be bedroom 1. Bedroom 2, again, you could maybe just move this partition over and just steal a little bit more for bedroom 3. And then it depends how big this is really, but there's options, definitely options here. Again, another thing I'd be looking at is sort of roof space. Go onto Street View. I'd be going straight onto Street View, looking on there, and if you're on Street View, walking up and down the street on Street View, have there been any loft conversions as a setting precedence? If there's been some loft conversions, there might be an opportunity, but it doesn't actually look like there have been up here. Just because what I'm looking up for here now is roof lights, roof windows. I can't see any at first glance quickly. So again, these are just the sort of things that we're looking at when we look at properties. We're trying to obviously maximize the value, maximize the cash flow as best as we can, offering as much housing as we can. These are sort of processes that we go through in our heads. So it's just quite nice to share with you, hopefully give you a bit of a feel and an idea on what to look for. This living room reminds me a lot of James's house now, actually.
Thanks, Dan. Cottage life.
The cottage life.
Yeah.
No, I like the red. It's just the red. But yeah, look, guys, great opportunity. What I have found, again, those who are regular listeners and watchers, you'll notice that I've got on my laptop, when you view this in Google Chrome, you've got a little property tracker app that you can install. On the tracker app, it tells you when the property came to market and if there's been any reductions. So I can see here a little green arrow, which is brilliant. Music to my ears and my eyes, because I can see that there has been a price reduction. What does that tell me? It tells me there's a bit of motivation there. So this property was first put on the market last July at 210. It has since been reduced last week to 195. So clearly it's sticking. Why is it sticking? Price has got to be wrong. There's got to be something wrong with it potentially somewhere. Do your homework. There might be a good deal to be had here.
Absolutely, and I think if you can add another bedroom in there, you can add that
value quite easily.
Better value, and I know just from looking at nearby sold prices, there was another one, a 4-bed on there that was sold at 240. So if you could get a reduction on price, I don't think the refurb there needs to be huge amounts, albeit you're going to need new kitchen, bathroom, etc. But I don't think it's going to need to be, structurally getting involved. You've got new windows, and the EPC on this one is actually a D.
Oh, is it?
So it's not too bad. I think there are other ways that you could bring that up to a C as well. So I think it's a good buy, but you might be able to get it a little bit less. Sorry, Bradleys, but there is a reason it's not sold at the moment. So it's been empty. I think the sellers would be a little bit motivated on this one. So go for it.
Anything to add?
Well, I'm just interested to see when you talk about HMOs and so on. Because it's not my market, the residential side of things so much. So what is the difference in demand from HMOs through to just standard sole tenant for properties like this? I mean, I get it in university towns or towns with a high number of sort of young college students, etc. Other towns which are more sort of family-based towns and sort of that. So
we've got HMOs in Truro. I've got so Falmouth and Penryn. They're probably the more stereotypical, but we've got HMOs down in Falmouth and Penryn. But funny enough, none of them are student HMOs.
Right.
So again, for those of you not familiar, HMO is a house of multiple occupancy where you've got 3 or more people from different households living together. So what is the popular, to answer your question? It's the knowing what the bill is going to be, because with our our package that we offer is all bills included.
Okay.
So they would offer, for example, pluck a figure out the air, £600 a month. For that £600 a month, you've got your room, you've got your gas, water, electric, council tax. You've got your broadband included on there. So we have cleaners as well. So for that money, you know exactly what your outgoings are going to be per month. Whereas you compare that to if I was going to buy a flat and I was going to rent my own flat, well, the rent itself is probably going to be £700. Then I've got to pay my own council tax. I've then got to pay my own utilities. So it's just like a more affordable kind of entry level. Yeah. So what I find is that people are going to HMOs are either people who are just leaving home or just finished university, or they haven't quite got the funds or the equity then to actually buy or rent their first place their own. So by going into a shared house, one, it keeps the costs down, but it gets them in their own independence. I've got rooms available at the minute down in Falmouth that are letting, and the reason why I've got people moving is because they've got new jobs or they're moving in with their partner. I've also got people interested because they've either split with their partner or they're moving to the area and they want to just get their feel for the right area they want to be in. So we have tenancies of 6 months, and then they go to rolling contracts generally. But it's knowing what they're going to pay each month. I think that's the main kind of carrot, really.
More so now than ever, with bills going up and people not knowing, can they afford it? You know, and lots of people, even when they do try and rent places because they want to on their own, like the agents are doing stress tests on them, and if they haven't got a guarantor, it's like, I'm really sorry, guys, your salary's okay, but it's not okay actually, because worst case, what would you do if in this position if you lost your job? So they have to go for something like this that costs a little bit less, and the stress test is a bit easier on them. So
and then on the flip side, it's more onerous on a landlord, because
I was going to ask you that
you've obviously got a lot more wear and tear on the building. Totally. You've got to take responsibility of the bills as well. But where's the uplift? Really, it's that you're, instead of getting, for this house, for example, I'm not sure on the market here in the rental properties, say this was going to rent for £700 a month, I don't know, but in this area, I could let a room maybe for £600 a month. So I've got 3 times 600 or 4 times 600 as opposed to just one lot of that. But the only differences are it's not all profit, because I've also got them pay the gas, water, electric, etc. So it literally is a cash flow game in terms of, well, what is going to be better cash flow wise? Well, HMO will be more beneficial cash flows wise, but what you've also got to weigh up is, well, there's going to be a lot more maintenance. There's potentially a lot more issues. Trying to marry up the right people in the right house is never easy. But the key is getting a good agent on board.
Yeah, totally. Well, I suppose it goes back to your earlier comments, isn't it? If you know your market, you do your homework. Is it going to work in that location? And there's no point picking up property somewhere where it's it's unviable to think you're going to get an HMO there.
But why would people do HMO? It's more cash flow. Yeah, better cash flow.
Yeah, there's definitely people looking for housing, so I think they'd rather have a room than nothing.
Exactly that, and again, it's the beauty of that. Well, in this property, you could bring 3 people together rather than just housing one family sort of thing. So it could tick a few more boxes in that respect. But no, great question, guys. Well, that is the end of this episode of the podcast. Thank you ever so much for listening. Again, we are back next week for an Ask Dan and James episode. We're going to have special guest Tom with us for that episode too. So we'll have some extra questions which are more commercially focused. And again, thank you very much for listening.
Absolutely, and just remember, you can get in contact with us by going onto our social media platforms such as Facebook and Instagram, and you can also send us email on podcast@cl-property.com. And Tom, thank you very much for coming on the show as well. And just if people want to get in contact with you, it might be something for a commercial. I'm not throwing you to the wolves, but I'm sure some of our listeners and viewers will probably want to get in contact. How do they do that for yourself, sir?
Great. Well, firstly, thank you for having me on board. It's been
You're
really
welcome.
Interesting, really exciting. Get in touch with us. We are. Look at our website, it's probably the best place. You get the best sort of window into sort of who we are and what we do, which is www.miller-commercial.co.uk. LinkedIn, find us. We're all there on LinkedIn. We're all quite active there.
Thomas Smith.
Yes, I'm trying to think if I'm Thomas Smith or Thomas Smith. Actually,
I think you are Thomas Smith.
I think I might be Thomas Smith, being very professional. I'm there on LinkedIn. Those are the best things. Get online, have a look at the website, and then get in touch.
Fantastic. I'll put links to the website and Tom's LinkedIn as well on the show notes. So if you do want to connect with Tom, please do. And again, thank you from me as well.
Pleasure.
Guys, until next time, it's goodbye from me.
Bye from me.